Hello and welcome to the Advanced Audit and Assurance Practice to Pass session for March 2019 examination being organized by ACCA Pakistan. I am Kashif Kamran, your tutor. Now, just before starting on with the proceedings of this Practice to Pass session, I would formally like to introduce myself and the agenda of this Practice to Pass session. In terms of my tutor profile, I am Kashif Kamran, and I have currently an 11 years of teaching experience. I am currently associated with the Tabani School of Accountancy, which is a platinum approved learning provider of ACCA in Karachi, Pakistan. Two of the core papers which I teach at the Tabani School of Accountancy includes the Advanced Audit and Assurance paper and the Strategic Business Leader paper. This is my fifth AAA Practice to Pass session, which is being organized by ACCA Pakistan. And one of my unique way of putting the AAA paper is my exam-focused teaching style. And my students have attained various nationwide positions from Pakistan and across and from different parts of the world. Now, moving from my tutor profile and starting on with the agenda of this Practice to Pass session, which is spread over the 4 days, Monday, Tuesday, Wednesday, and Thursday. Let's see what is the specific agenda of this Practice to Pass session. Now, in terms of the agenda, the day one, which is today, we are meeting to discuss risk assessment. Day two, which is tomorrow, we will be meeting for discussing evidence. Then on the day three, which is on Wednesday, we will be meeting and discussing ethical, professional, and quality control issue. And then on the last day, which is Thursday, the day four, we will be assembling to discuss reporting. So these are the 4 areas which has been included in this 10 hours of Practice to Pass session. Now, just moving away from the agenda and looking at the paper format, because there might be many students within this Practice to Pass session who will be appearing for the AAA paper for the very first time. Now, if you're appearing for the AAA paper for the very first time, you should be assured of the paper format which you will be attempting in March exams. Now, we know the paper format since September 18 exams have become all compulsory. You have 2 sections in the paper, one being the section A and the other being the section B. So you have a section A and you have a section B. The section A consists of 1 case study, which is worth 50 marks. Then the section B consists of 2 25 marks question, the question number 2 and the question number 3, each worth 25 marks. Now that makes a 100 marks paper. So in terms of the time management, this is a pretty simple paper because you have 3 hours of writing time and you have 3 questions which you are attempting in the exam hall. So you have 150 marks question followed by 2 25 marks question, this is how the paper has been structured. Now, the examining team of the AAA paper has given a very clear syllabus guidance and has connected the syllabus guidance with the section A and section B, which you should carefully look into. As per the examining team, the syllabus area ABCD, will come in the section A, but can also be tested in section B. Now, if you look at the syllabus area ABCD, basically, the syllabus area ABCD includes risk assessment. It includes ethical, professional, and quality control issues. And it also includes the practice management. The practice management, a lot of students are unfamiliar with the term practice management. The practice management means client acceptance. The client acceptance topic within the AAA paper is part of the practice management. Now, Risk assessment is an area which is only examined in the question 1. So you cannot expect the risk assessment to be part of the question 2 and question 3, because risk assessment is a definite syllabus area which has to fall in the question number 1. Ethical, professional, and quality control issues is an area which can fall anywhere, we have seen the September 18 exams specifically where ethical, professional, and quality control issue was in the question number 1, in the question number 2, and then in the question number 3. So that is an area from the syllabus which can be put in any question, and you should be mentally prepared for that. There is no one position for ethical, professional, and quality control issues. The ethical, professional, and quality control issues can be fit in any question. Question number 1, question number 2, and question number 3. So that is the most important area in terms of being very flexible in the exam paper. But risk assessment is not a flexible area, right? Risk assessment has to come in the first question, because the first question is on planning and risk assessment. Then you look at the practice management area. Again, the practice management area is a flexible area which can be in this question number 1 and which can be in the section B. So you have to consider ethical, professional, and quality control issues and the practice management area as a flexible area which you can find anywhere in the exam paper. But risk assessment is a definite area which you will find in the question number 1. Now, as I start the question number 1 on the first day today, I will be telling you more insights of the question number 1, which will help you better prepare for the March 2019 exams. Now, when you look at the syllabus area, which falls in the section B of the paper, now section B has a question 2, and this question 2 is a definite question which is on reporting. In September 18 exams and in the December 18 exams, in both the instances, this question was on reporting. So examiner has set the right benchmark here, that the question number 2 has to be on reporting. When you look at the question number 3 of the paper, now the question number 3 can be on other assignments, but question number 3 can be on any syllabus area. If those of you who have attempted the December 18 exams, the question 3 was also on money laundering. Now we know money laundering is the syllabus area A. So syllabus area A, B, C, D, except for risk assessment, can fall in the question 3. So question 2 is a definite reporting question. Question 1 will definitely have risk. But the question 3 to me is the most experimental question. So question number 3 is the most experimental question. Most important thing which can come in the question number 3 is other assignments. And for the March 19 exams, the potential of other assignments coming in the question 3 is very significant. So you should be better prepared on other assignments if you're preparing for March 19 exams. So please assure that you have refined the the other assignment areas very effectively. Okay, just one last recap. The question number 1, a 50 marks case, will definitely have a risk topic. And beside what else can be tested in the question number 1, I'll be telling you more about that as I start with my day 1 proceedings. The question number 2 definitely has to be on reporting, and we are doing reporting on the day 4. And then the question 3 can be from any syllabus area, but the more important area which can be encashed in the question number 3 is other assignments for the March 2019 exams. Now this is just an holistic view of the paper format, particularly for those students who are preparing for the AAA paper for the very first time in March 2019. Okay, now just proceeding further and coming closer to the start of the day 1, I would just like to give some housekeeping instructions to all the attendees because this is the most appropriate time because we are 10 minutes into the session. So each one of you can carefully concentrate on the housekeeping instructions. First of all, you will get the link to the WhatsApp group, which has been particularly made for the students appearing for March 2019 exams for AAA. You will be on the WhatsApp group. If you have any questions on a daily basis, you can drop your questions on the WhatsApp group, and I will be responding to your queries on the WhatsApp group through my voice messages. So that would be more easier for me to concentrate on the delivering of the practice over the next 2.5 hours. And I can concentrate on your questions through the WhatsApp group. And the WhatsApp group link will be shared with you during the course of the session today and even tomorrow. Second housekeeping instruction is that if you have any questions, uh, put your very specific question on the WhatsApp group so that you can get a very appropriate response by the tutor on the WhatsApp group. And if you need any documents, which I will commit, only the committed documents over the next 4 days, I will be sharing them on the WhatsApp group. So I hope you utilize the WhatsApp group more effectively for the student-tutor interaction. And during the live session, I will prefer that you focus more on the practice which is being shown to you in the live session, because that will really help you in the better preparation for your March exams. Okay, now moving away from the housekeeping instructions, we are finally coming down with the day one. The first day of this practice to pass session for March 19 exams is focused on risk assessment. And now in terms of risk assessment, I have chosen some questions which I will be demonstrating live in the session, which includes the June 15 question, number 1, and which includes the June 17 question number 1. And I have set 2 home questions for you to practice, which includes the September 18 question number 1 alongside the June 18 question number 1. Now, the reason why I choose June 15 and the June 17 for this live practice session was the reason that when you look at my previous sessions on the right-hand side of the screen, in my previous sessions, I have not covered these 2 questions. If you look at my March session, I covered the December 14 exams. In my June session, I covered the June 13 and the December 14 exams. Then in the September 18, I covered the December 15 exams. And then in the December 18, the last time, I covered the December 17 exams. So you have access to the Vimeo, where ACCA Pakistan is having a channel on which the previous practice to pass sessions are being put in. So you can access these previous sessions as well, March 18, June 18, September 18, and December 18. And you can access to the December 14 question, the June 13 question, the December 15 question, and December 17 question. So I just don't want to repeat the question. So I've chosen 2 new questions for this session, one being the June 15 and one being the June 17. So I can demonstrate them in the live session for your better understanding. And then you have access to the previous webinars, which can be really beneficial for you if you want to have a better preparation. Now, when I am starting on with the risk assessment, for March 2019 exams, I will be more focused on audit risk and the risk of material misstatement, because in my last webinar, which I conducted for December exams, I really focused on business risk, because that was really very important for December exams. And the good thing was that in the December 18 exam, there was an actual question on business risk. Now for the March 19 exams, you should not ideally be spending time on business risk. Rather, you should be spending time on audit risk, or you should be spending time on risk of material misstatement, because you're just 3 weeks away from your exam paper, right? So you should know the priorities. You should know the priorities you should be going down with the March 2019 exams. So in terms of priorities, I believe that a question on audit risk or a question on risk of material misstatement is high likely. And that's the reason of choosing this topic for my March 2019 practice to pass session. Now, There are two very important articles, right, which is right in front of your screen. And these two articles are very, very good articles. If you want to be really good on risk in AAA paper, then the very first article which you can see on your screen, the hyperlink of which has been given to you, this is a very explorative article, because this article really explores the student lackings in risk question. And if you read this article will really set the parameters of how you should be good at risk. I would prefer that you skip the business risk from this article and you focus on the audit risk and the risk of material misstatement in this article, so you know the do's and don'ts of the risk question. Then secondly, there is another article which has been shared with you, which is the link number 2. And this is an article on accounting issues. Now we know in a question on risk, the audit risk and the risk of material misstatement, accounting issues are very important, because most of the time in the question number 1, you find a lot of accounting treatments. You find a lot of accounting issues which you need to identify and convert to risk. So if you think you are weaker on having a command on accounting issues, or you don't know how to tackle accounting issues in the AAA exam, then you should be exploring the link to the second article. So uh, the link to the first article and the link to the second article, right? These are two very important links that you should be going through, because they can really refine you as a student, and they can really make you aware of the problems the student do when they're attempting a question on risk. So please ensure that you make a priority list of reading these two articles as a must to read articles. So this is the knowledge, right? This is the knowledge which you should be gaining. Then next, audit risk, which is very, very important for March 19 exams. And when I say audit risk includes the risk of material misstatement. Audit risk includes the risk of material misstatement, right? So when you are attempting a question on audit risk, you are also preparing yourself. You're also preparing yourself for a risk of material misstatement situation. So let's start the drilling on audit risk. Alongside the risk of material misstatement, I need to guide you on the updated marking scheme, so that you know the most recent marking scheme being used by the examiner. And I should also be guiding you about the do's and don'ts which you should be implementing when you are answering a question. So I'll be demonstrating 2 live answers in the session today, just to make sure that you have a clear understanding of attempting the answer. Okay, let's start on with the audit risk. Now, when you look at the audit risk from the exam context, now this is my Word file, which I will be using on a daily basis across the 4 days. And this is the Word file which I will be sharing on a daily basis on the WhatsApp group. So this is my first commitment on the WhatsApp group, that on a daily basis, I will be sharing this Word file which you are seeing right in front of your screen. So if you miss anything out from this Word file, you can still catch on through the WhatsApp. Okay, let's start the day 1. Let's start on with audit risk and risk of material misstatement. And I will be abbreviating the risk of material misstatement as ROMM. ROMM. Now, when you're preparing yourself for audit risk, you should have some clear guidance in mind. First of all, when you look at the formula for audit risk, and we know that the audit risk is equal to two things. The audit risk is equal to the risk of material misstatement. The risk of material misstatement multiply by detection risk. Now that's a pretty simple formula. Now that means when you are attempting a question on audit risk within the case study, you can identify from the case study the risk of material misstatements, and you can identify from the case study any given detection risk. So when you are attempting an audit risk question, okay, welcome back, right? When you're attempting an audit risk question, that means from the case, from the case study, from the case study, you are identifying, two things. Number one, you are identifying the risk of material misstatements, which may be many within a case study, and you are also identifying a detection risk. So because you're attempting a question on audit risk, right? So you will be finding many ROMMs within the case, and you will be finding some detection risk, because detection risk, honestly, are not much in the case study. To be very blunt, the detection risk is hardly one or two. Most of the time, it's just one. So most of the time, what you are identifying from an audit risk case study is mostly the risk of material misstatement. So the ROMM will be mostly, and the detection risk will be very few and very limited. Now, vice versa, if you are attempting a question on ROMM, then from the case study, you are only identifying the risk of material misstatements. So I hope you can feel the difference between attempting an audit risk question and attempting a risk of material misstatement question. To a maximum extent, both are same. To a maximum extent, both are same, because both involve the risk of material misstatement. The only difference when you attempt an audit risk question, that you also try to identify the detection risk from the case study, which will be very few and limited. So attempting an ROMM question and attempting an audit risk question, can you feel the difference between the two models? The only difference is that one of them has detection risk and the other do not. So if you are clear on that, that means you have an idea of attempting a question on audit risk as well as a question on risk of material misstatement. Now remember, what's the focal point? The focal point, if you are attempting a question on audit risk or the risk of material misstatement, the focal point which will help you survive the exam paper. So the focal point of audit risk and ROMM is to identify the risk of material misstatement. Now, any one of you who knows how to identify the risk of material misstatement will be very good in a question on audit risk, and will be very good in a question on risk of material misstatement. So what I will be guiding you over the next 2 hours will be the guidance on the risk of material misstatement. Because if you become good on risk of material misstatement, then your survival in an audit risk question and your survival in a risk of material misstatement question will really become good, right? So this is how you should be focusing on attempting an audit risk question and attempting a risk of material misstatement question. Now let's start our journey. Now, when I speak of the risk of material misstatement, that's the first thing. Now, when I focus on the risk of material misstatement, starting on with the exam practice, remember one thing, that when you focus on a risk of material misstatement, risk of material misstatement within a case study, you need to look at the accounting treatments or the accounting treatment situations given in the case. Now, when you start reading the case, as we will be doing shortly in this live session, when you're reading the case, you will come across many accounting situations. Sometimes the examiner will be emphasizing on IS 21, sometimes the examiner will be emphasizing on IS 38, sometimes the examiner will be emphasizing on IS 36, sometimes the examiner will be emphasizing on IFRS 9, sometimes the examiner will be emphasizing on IFRS 2, sometimes the examiner will be emphasizing on IAS 12, etc. There will be many accounting treatments or situations present in the case study. Now, you should be clever of identifying the risk within the situation, within the accounting treatment situation which has been given to you. So the first source, right? Accounting treatments and the situations given in the case study, try to identify the risk associated with the accounting treatment. And I'll be guiding you how to go about it. Second, there are many situations in the case which relates with management bias. Now, if you've done the past papers, you've gone through the past papers, there are many situations, right, within a question on audit risk or within a question on risk of material misstatement, which particularly relates to the risk of management bias. There might be many situations where you think that the management can be involved in window dressings. There might be many situations in the case where you think that the management can do something wrong. So you need to identify many situations which relates to management bias. Situations like judgmental areas, subjective areas. Now, any areas which are subjective, like the fair values, like the provisions, like estimates. Now, wherever you see something like an estimate or something like a fair value or something like a provision, these are subjective areas, right? And there is a risk of a management bias in subjective area because the management can exploit the subjective areas for a window dressing. Then more importantly, you need to look at situations. You need to look at situations which can even relates with the financial statement numbers. There might be many things within the financial statement numbers given to you. And in most of the questions, we see the balance sheet and the income statement. Now, there might be many risks which are hidden in the financial statement numbers. You have to be clever. You have to be clever for that. Now, there might be some unusual fluctuations in the numbers. You might find that something is increasing a lot, or you might find that something is decreasing a lot. And you need to relate that with the risk. You need to relate that with how that increase or decrease converts to a risk of material misstatement. So you need to find the unusual fluctuations, right, in the number. Secondly, you need to find whether there is something static. A lot of time, if you've seen the past papers, the examiner gives you situations where things are static. For example, the examiner tells you that the finance cost is static, despite the fact the company has taken a loan. Now you will wonder in the exam hall that the company has taken a loan, and despite that, the finance cost is static, right? So you might think in the exam hall, how can a finance cost be static when the company has taken a new loan? So try to identify some static numbers. Try to identify some unusual fluctuations, because mostly these numbers are part of a risk question, and you cannot just ignore these numbers, right? So when I start the practice, I will be doing practice of both the questions, one with numbers, one with analytical procedures, and one without analytical procedures. So when you read the case, let's do a final recap. Then I'll take your answer. Then I'll take a feedback from you, and I'll stretch down to the first question. Now, when you're attempting a risk of material misstatement case study, or you're attempting an audit risk case study, right? From within the case study, you need to be very focused on accounting treatments, because the accounting treatment can give you a risk, and you can connect the risk to score your marks. Secondly, there might be many situations in the case study where you think there is a risk of management bias. The management might be biased, the management might manipulate something, and you identify those situations from within the case study. And then you're down with the numbers, right? Because the numbers can be very interesting in the exam context, and the numbers can give you some very hidden risk. Any student who's clever to analyze the numbers will be a far better student, because if you can analyze the numbers, you can really do a wonderful risk answer. So is that context clear to everyone? If I can just get a quick yes or no responses from your side, that this structure of a case study, is that clear to every one of you? That how you will be going down identifying the risk from the case study? Because I'm trying to make a fundamental very clear, right? Before I just get to the case, and I start off with the case. Okay, that's wonderful, right? Okay, now moving towards last thing and starting on with the practice session. The marking scheme. Now you should be very familiar with the marking scheme, because a lot of marking schemes have changed since June 18 exams. And I need to guide you upon the most latest marking scheme when you're appearing for March 2019 exams, because if you're using the old marking schemes, you might be distracted, or you might be writing more when you should be writing less, or you should be writing less when you're writing more. So you should know the very updated marking schemes. Let's get to the marking schemes first, and then start on with the practice session. Okay, the most updated marking schemes, right? Let's put that in the bracket so that you know that very well. Now, each audit risk, and each risk of material misstatement, whatever comes in your exam paper, is worth 3 marks, And when you look at the 3 marks, the examiner is very careful here. He says each audit risk and a risk of material misstatement is worth 3 marks only if it involves the determination of materiality It involves the determination of materiality, the comment on the accounting treatment, and the associated risk of material misstatement. Now, there are many situations, right, within the case study where you can do all the three together. You can determine the materiality, you can comment on the accounting treatment, yes, and you can comment on the risk of material misstatement. So I normally use an abbreviation, and many of the students here might be familiar with my abbreviation known as an MTR. M is the materiality, right? T is the treatment, R is the risk, right? It's good to see the students' response to that MTR. A lot of students are used to that MTR mnemonic, right? So when you use the MTR in your answer, that means you determine the materiality, you comment on the treatment, and you comment on the risk. Now that MTR is equal to 3 marks. So if you answer more situations which involve the accounting treatments or situations which involve the M, you can get marks very quickly. If I do 4 situations with MTR, I can straight away get 12 marks. So if I just want to pace up my answer, I will be looking for more MTRs in the case study, because the MTR will give me very quick marks. So the marking scheme for an MTR is now 3 if you find a risk from MTR. Then secondly, each audit risk or each risk of material misstatement is worth 2 marks if identified through situations where there is only a treatment and associated risk. Many times the examiner gives you a treatment which does not have a value, so you cannot comment on the M, right? So if you just comment on the treatment, because there is no value assigned to it, and with the treatment you comment on the risk. So the treatment and the risk will give you 2 marks, right, where you're not using the M. So if you just use the T and the R, the treatment and the risk, you will get 2 marks. And the last, you will still score 2 marks. For statements involving something like listed company, which is a very journal risk. Statement like weak internal controls, which I refer as journal statements, right? So if you come across journal statements like listed company, the weak internal controls, or statements like this is a new audit client, which is basically a detection risk. So if you come across situations like listed company, weak internal controls, a new audit client, which is like journal statements, again they will give you 2 marks. So only the situation which can give you 3 marks is the MTR. If you only write the T and R, you will get 2 marks. And if you write any journal risk, like the company is listed, this is a first year audit, the controls in the company are weak, the company does not have an internal audit department, situations like such will give you 2. Okay, the last thing. Now, if the examiner asks you utilize the analytical procedures, you must have seen past papers where the examiner says you utilize the analytical procedures or perform the analytical procedures. When you see this requirement, right, which is part of a question, and I'll be doing that in the session today. When the examiner says utilize the analytical procedure or perform the analytical procedures, then you have 5 marks for this, requirement. But how would you gain these 5 marks? Examiner says if you want to gain these 5 marks, then you have to do this. You will do 5 ratios. 5 ratios of the current year and the last year? So you will calculate the 5 ratios of the current year and the last year. So that means you have to calculate the 5 ratios, right? But the calculation will not give you 5 marks. Till the time you calculate the 5 ratios and you comment on these ratios. Comment what? Not the journal commentary, right? Comment on the ratios. That is, what is the risk associated with the ratio? What is the risk associated with the ratio? So you have to do a brief commentary under the ratios, and I'll be telling you how to do it. So under the table of the ratio, you will do a brief commentary. You will think about each ratio, and you will think how each ratio links to the risk. So you will get in all 5 marks. The table of the ratios, is that clear to everyone? The table of the ratio, and followed by a brief commentary of the ratios. So that in all will give you 5 marks. So is everyone clear on the marking scheme? I'm just doing a final recap of the marking scheme, and then I will be taking your yes and no answers. First of all, MTR will give you 3 marks. If you only write a treatment, and a risk, you will get 2 marks. If you write risk from journal statements like company is listed, there is no internal audit department, or there is only one non-executive director, then you will just get 2 marks. Only the situation which will give you 3 marks is the complete MTR. Beside the complete MTR, whatever risk you write in the exam paper, you will get 2 marks. And finally, when the examiner asks you utilize the analytical procedures as part of the question, then you have 5 marks for that, right? And 5 marks means you are making a table of ratios, and followed by the table of ratios, you are connecting the ratios with risk. So in all, you will get the 5 marks. And I'll be demonstrating that as I start the practice session shortly. Is everyone clear on the marking scheme? This is right in front of your screen. This Word file will be shared with you so that you can go through the marking scheme. And I'll be demonstrating the marking scheme as well, right? As I start the practice of the 2 questions. So I'll connect the marking scheme, and I'll guide you. See, I got 3 marks. I'll guide you. See, I got 2 marks. So I think that will make you more clear when that gets to the implementation. Yes, exactly, Karan. And in some situations, the number is not given, so you cannot determine the M. So in that case, you will get 2 marks, right? Yes, exactly, Faraz Khan. 1 mark for comment and ratio, both, right? So when you determine the ratio and you comment on the ratio, in all you get 1 mark. Okay, that's great, right? And there are lots of questions, right, which is asking for the new articles. I'll be just putting a short emphasis of the new articles on the day 4 in the last 15 to 20 minutes, guiding you what new articles have come in and what you should be focusing on, because there are many questions since the start of the webinar on the new article. So I'll be spending a quick 15-20 minutes of the time on the day 4, telling you and guiding you about the new articles you should be focusing on. Okay, let's start with the practice, because lots of confusions about the marking scheme will get through the practice phase. Okay, let's start on with the question. The first question we're starting on is a question which is from the June 2015 exams, and we're doing the question number 1. This is before the break comes into the session, and post break into the session, I'll be doing the June 17 question, which includes utilizing the analytical procedures. Okay, yes, Farasat Ali, can you just put your question on the WhatsApp group? So once I end the session, I'll be responding you more appropriately. And any questions which I am not answering currently, please assure you put your questions on the WhatsApp group so that it can be answered over the next 24 hours. Okay, back to the June 15 question number 1. Let's put that in front of your screen now. Now, all of you can see the question 1 of the June 15 exams, which is on audit risk. And audit risk is a very important area. And this question will help you realize the marking scheme of 3 marks and 2 marks, when you will get 3, when you will get 2. So you will have a better clarification to the 3 and 2 marking scheme. And the next question then even. Now, when you look at this question, which is right in front of your screen, and you go down and you look at the requirement B of this case study, when you look at the requirement B of this case, it says evaluate the audit risk. So you have the requirement B specifically asking you to evaluate the audit risk, and the marks given to you are 17. So you have 17 marks, right? So you cannot be sure whether to divide 17 marks with 2 or 3, because there might be many risks in the case which will involve the MTR. So those MTR risks will give you 3 marks, but the one which is without MTR will give you 2 marks. So you cannot definitely divide 17 with 2 or 3, because there might be some with 3, some with 2. So roughly 17 marks. And if I look at them with 2 and 3 average, that's like 2.5 marks. So probably I will be writing something like 4 and 3, 7 to 8 risk with the combination of 3 and 2 marks, and I'll be getting through the 17 marks, right? So I'll just be demonstrating that. Now, I'll be reading this question with you, and I'll be stopping and answering your questions for 2 marks and 3 marks as I start drilling the answer. But please be assured with one thing very, very importantly. You are attempting the question number 1, right, which is now of a 50 marks. And to be good on the question number 1, which is of 50 marks, you should have something very realistically in mind. When you are attempting a question number 1, right, you have to do something very carefully. Now, we know the question number 1 is of 50 marks, right? So when you are attempting the first question of 50 marks in the new format, understand one thing. The number one thing you should be doing when you are attempting the question number 1, put in the briefing note and maximize your 4 professional marks. These are very important, right? And I'll be demonstrating these 4 professional marks as I structured the question. But put in the briefing note. You should be capable of doing a good briefing note in the first question, because with a good briefing note put into the first question, you are maximizing your 4 professional marks. That's the number 1 thing in the first question, right? Then in the second thing, in the question number 1, you should know the requirements carefully, because the question number 1 has diversified requirements, right? The question number 1 has diversified requirements. The question number 1 focuses on risk, which is the major marks. The question number 1 at times focuses on ethical and professional issues. The question number 1 also includes something like procedures. The question number 1 includes procedures. At times, the question number 1 also includes some knowledge areas from the syllabus area ABCD. So it's quite a diversified question. So when you're attempting a diversified question, you should know the requirements carefully, that how many marks have been allocated to each of these requirements. Now, when you know the requirements carefully in the first question, then you should also be knowing the relevant marking scheme, which I will be guiding you on all the 4 days. So you should know the relevant marking scheme for each area, so that you know how much points I should be writing for each areas. And you will be getting an idea of these marking schemes over the next 4 days as you're currently getting the relevance of the risk marking scheme. Then the fourth thing, filter the case from top down. Filter the case from top down and identify the risks. Identify the risks. So filter down the case. Filter down the case, identify the risk, because I'm currently focusing on just one requirement here, right? Which is the risk requirement. I'm not focusing on any other requirements. So you filter down the case and you just keep underlining, the risk within the case study along with the marking scheme in mind. Then the second last thing, see whether you made up your total marks. Now, when you're filtering down, you're underlining the risk, as I'll be doing them shortly. You underline the risk and think 2 marks. You underline the risk and think 3 marks. So 2, 3, 2, 3, you go across the case study. Some point in time, you will realize I got my 17 marks, done. Now that's the time you will attack the answer booklet. And that's the time you start writing your answer. And the last thing, when you total up your marks, you will start writing the answer, and you will, for each risk, you will explain it properly. For each risk you will explain it properly to score 3 or 2 marks. And I'll be telling you how to explain properly. Now that's the agenda of the session today, right? Explain it properly, because that's an area where students are so weak at. They fail to explain properly, and instead of getting the 3 marks, they get 1.5 marks. They get 1 mark. So we need to be very much focused upon explaining it properly. Now that's an approach which I would prefer you adopt for the question number 1, that you put in a briefing note and maximize your marks. I'll be demonstrating that. Then you should know the requirements. Then you should know the relevant marking schemes. You filter the case top down, identify the risk, see whether you made up the total marks, and then start writing the answer. Right? Is that clear to everyone? The approach to the first question? How would you be approaching the first question? Is that clear with everyone? So we can start down with the June 15 drilling now. Okay, that's great. Now let's keep a strong focus on June 15 exams, which is right in front of your screen. We have a 17 marks target to attain through evaluating the audit risk. We need to make a briefing note, and I'll try to apply each and everything I just told you once I start reading the case study. Please, everyone who is unclear about the marking scheme 3 and 2, just stick to the screen now and see how I would guide you about the 3 plus 2 markings, 3 and 2 marking scheme. Okay, just start reading the case. Opening para. You are a manager in the audit department of Craigie, a firm of chartered certified accountant, and you have just been assigned to the audit of TED Company. A new audit client of your firm. I am attempting a question on audit risk, right? And the examiner is telling me it is a new audit client of your firm. So straight away, a new audit client, because this is the question, this is a situation which does not have any treatments and does not have any materialities. So a new audit client of your firm will straight away give me 2 marks. So I take it back to my Word file and see, I'm filtering the case. I'm filtering the case from the top to down. So if I just filter the case from top down, the very first risk which I got, let's put that in the context of the June 15 exams. If I'm filtering the case from top down, the very first risk which I got is a new audit client of your firm. Now, this is a situation which can only give me 2 marks. because this is without the MTR, right? So that was my situation, right? When you have a journal situations like such, journal situations will only give you 3 marks, 2 marks, sorry. So we know a new audit client is a detection risk. So you will relate this with a new audit client, and you will relate this with a detection risk because you're doing a question on audit risk, right? So let's see how we filter down the case. That's number one. Number two, back to the case. A new audit client of your firm with the financial year ended 31st of May. TED company is a newly listed company. That's a very significant risk of management bias, because when the company is listed, they can window dress the financial statements to show a better performance to shareholders. Now, when the company is listed, the company has an incentive, right? The company has an incentive to show better results to shareholder, so that the shareholder interest in the company remains. So this is a newly listed company. That's a remarkable point here. A newly listed company, and I'll take it back to my Word file and I'll say a newly listed company. And a newly listed company will give me 2 marks because there is a risk of management bias. There is a newly listed company, right? So see the opportunity. Just in the first intro para, there was a potential for 4 marks. These are journal statements, right? These are statements which have nothing to do with materiality, treatment, and risk. So I think all of you are familiar with a new audit client situation, and all of you are familiar with the newly listed company. And you can see my standard answers, which I have shared with you as a resource to this Practice to Pass webinar. And I'll be drafting some of them for your guidance as well, once I trickle down the whole case study. So we got 4 right. Next. Okay, then you skip and you go down. And you start reading from the notes down under the email. Okay, now I'm reading that under the email, right? TED company was formed 10 years ago by Dougal, a graduate in multimedia computing. The company designs and develops and publishes computer games, including mainly highly successful games which have won industry awards. In the last 2 years, the company invested $100 million in creating games designed to appeal to a broad global audience, and sales are made in 60 countries. Sales are made in 60 countries. Sales are made in 60 countries. Now, I can only apply the treatment and the risk. Sales are made in 60 countries. I can think about the risk. I can think about the treatment, ICE 21, and I can think about the risk associated with ICE 21. So the maximum marks I can get here is 2 because I don't have a value. Sales are made in 60 countries. So an accounting treatment and a risk, right? So let's go down, put another one. Sales are made in 60 countries. And I got my risk of a treatment plus a risk, and a treatment which is confined to IAS 21, and I'll be taking on my 2 marks here. 2 marks, bracket close. So far we got 6 of the 17 marks. Okay, let's continue down. I hope you're finding that way. Trickle down. Start reading from the top. Keep going down. Keep filtering the case. Keep underlining the case. See how you're getting the marking scheme 2. So far we have not identified anything worth 3. Okay, let's go back. See, can we find a 3? The next line, the software used in the computer game is developed in the country with manufacture of the physical products taking place overseas. So yes, Sal, I'll be taking about the $100 million as a research and development because that's on the next page basically. So I just skipped the $100 million because there is more information about $100 million on the page 2. So the company's manufacture take place overseas. That's not a different point. That's not a different point, right? I'll include both the points under IH 21. Sales are made in 60 countries and the manufacturing takes place overseas. Both the points will come under IH 21. So my score remains 2. My score remains 2, right? My score is not going to 4 because both the situations have a link to IH 21. Okay, let's go down. Computer games are largely sold through retail outlets, but approximately 25% of the TED revenue is generated through sales made on website. Now that is a very important statement. 25% sales is made through websites. That's a significant proportion of the revenue, right? Now we know when you make sales through website, there is a risk of revenue recognition. There is a risk of revenue recognition when you make a website sales because there is a very difficult cutoff situation. The point of recording the revenue is very difficult. The point of recording the revenue is very difficult with the website sales. And the second risk, which is associated with the website sales is the detection risk, because there is a lack of audit trail. There is a lack of audit trail because there is a paperless environment. And when there is a paperless environment, it increases the detection risk. So 25% sales are generated through website. That's another scoring opportunity. 25% sales are made through website. So I will be getting 2 marks. First, for defining the treatment, that is the IFRS 15. I will be thinking about the revenue recognition, the time of revenue recognition, because on a website sale, the timing of recording the revenue is very critical. You might record the revenue at the time when you receive the order on a website. So that's too early recording of revenue. If I record the revenue at the time when I received the order, and normally that happens on a website sale. So the treatment and the risk will give me 2 marks. Then there is another risk, website sales. And I have to connect the website sales with detection risk, because the auditor feels uncomfortable working in a paperless environment because auditor does not get the proper trail. So when the auditor does not get the proper trail, that increases the detection risk for the auditor. So website sales, detection risk, and that give me another specific 2 marks. Now see, where are we standing? So far it's all 2, and so far it has taken us to 10 marks now. So out of the 17 marks, we have done the majority marks here by taking our score to 10. But I hope you can understand that we have not found any MTR so far. Let's see, can we find that into the next paragraph? No, Raisa. Faiz, you cannot show that as your materiality, because revenue itself is a component of materiality, right? So you cannot just use revenue as to define the materiality, because we take materiality on the basis of revenue. So you cannot just identify the materiality of revenue here. And again, the answers being unaddressed, please put them on the WhatsApp group. The next one. Okay. In some countries, TED products are distributed under license. So the moment we see license, we think of IS 38. In some countries, some of the products are distributed through license, under license. So we have another problem here. We have license, and license is another risk, which gives the license holder the exclusive right to sell the products. Now that means exclusive right means that when you sell the license, the risk and rewards are transferred. The risk and rewards are transferred. Muaz, the D and E is different, right? Because D is the accounting treatment of the website sale, and E is the detection risk. So D is basically the risk of material misstatement, right? And E is basically the detection risk. So both are unique points, right? Okay, so you sell the license, right, for exclusive rights. So that means the risk and rewards are transferred. So we can immediately record the revenue which comes from the license because the risk and rewards are transferred. The cost of each license depends upon the estimated sales. The income which TED received from the sales of license is deferred over a period of license. Now, when you're selling an exclusive right, that means the risk and rewards are transferred immediately, right? So it's a wrong accounting treatment to treat the income as deferred because the risk and rewards are transferred immediately. So you should have recorded the income not as a deferred income, rather than you should have recorded the income as one go. So currently, that means you have recorded it as a deferred income. That means you have overstated your liability and you have understated your revenue. You should have recorded the income from the license as in one go rather than treating it as deferred right because it is an exclusive right. So at 31st May, the total cost of the deferred income in the TED company's financial position is $18 million. Now, can we see the M for the first time? Can we see a value coming $18 million of the license? Now, can we comment on the license materiality? M. Can we comment on the license treatment that it should not be deferred, rather it should be taken as an income in total? And do we have a risk that currently the deferred income is overstated? So can we see the $18 million value? Now this is the first risk of 3 marks. So let's go back to the Word file and type license, the license recognition, so the license income. Now with the license income, we have the MTR because we have a value given, a value of $18 million given. So we have an $18 million value. So we can find the M followed by a treatment and followed by a risk. So now this is a complete situation for the first time, right? And this will give us the marks 2, 3 now. So see how difficult was it to find 3 marks here? After a very long time, we got the 3 marks, right? So we need to find the M, the materiality, the T, the treatment, the R, the risk. So M is given, right? M is given. M is $18 million. The T is the treatment of the license. They have recognized the license as a deferred income, whereas it should not have been deferred because the risk and rewards have been transferred. Yes, exactly, Wahidullah Nasiri. You're right. You're right in that statement. So the treatment is that it should not be deferred because the risk and rewards have been transferred immediately. Immediately, you will record the revenue. So currently, the deferred income is overstated. Zain Mansoor just given the answer because it had an exclusive rights. So exclusive right means the risk has been transferred, so you can record the income immediately. Had the risk and rewards not been transferred, then you would have treated it as the deferred income. Right, so we found 3 right. So we got 10 plus 3, we got 17 marks, 13 marks, sorry. Let's drill down further. Okay, as part of a 5-year strategic plan, TED company obtained a stock market listing. We've already taken the stock market listing as a 2 marks. The listing and the related share issue raised a significant amount of finance, and many shares are held by institutional investor. Dougal retains 20% equity shareholding, and a further 10% shares are held by the family member. So currently the family have 30% shares, right? The 20% shares are with Dougal, and the 10% shares are with the family members. So in all, the family holds 30%. You can connect this point with the listed company point we raised above, that the family has 30% shareholding. So the family has the risk of management bias here. If they show higher profits, the family will get a better dividend. So the family has an opportunity. If they show a better profit, they can get better dividends. So 30% shares are with the family. You can connect this point with the listed company above, This is not a separate scoring opportunity. Rather, you can incorporate this point when you're writing the listed company point above. Okay, then next, despite being listed, the company does not have an internal audit department and they only have one non-executive director on board. So that means they have quite a weak internal control system here. They does not have an internal audit department and there is only one non-executive director. So they have weak internal controls. That can give another 2 points. Weak internal controls, weak internal control and governance. So they have a weak governance and internal control systems. So that's very journal point, right? Will give us 2 marks. So we're now going up to 15. And then you take the next one. Recently, a small treasury management function was established to manage the company's foreign currency transactions, which includes forward exchange contracts, We got another treatment and a risk. Forward exchange contracts, the IFRS 9. We need to think about the derivatives and how derivatives are recognized on the financial statements. So, which includes forward exchange currency contracts, how you record them, how you record the forward exchange currency contracts, how you record the derivatives. And if the derivatives are not properly recognized or recorded, then the financial statements could be materially misstated. So through the forward exchange currency contracts, we got another T and an R. So forward exchange currency contracts, forward exchange currency contracts, but there is not a value. We only have a treatment of a forward exchange currency contract and the risk. So we just have 2 marks here, which is about the T and the R, treatment and the risk. Yes, Farooq, your suggestion is right. Your suggestion is right, which you are giving about the forward exchange currency contracts. Okay, so where are we? We got A, B, C, D, E. We got 10. We got another 3, 13. We got another 2, 15. We got another 2, 17s. That ends the story for us. Can you realize the situation, filter the case from top down? Now, I just filtered the case top down with you in the session. And 4 and 4, 8. I got total 8 risks. And those 8 risks have given me 17 marks. I should stop here. And I should start writing my answer. If I am confident that I can write good on the 7. But if I have a doubt, I'll start reading the case more and you will start filtering more risk. But if I'm confident to write on these 8, I can straight away get my 17 marks. See how many times we got MTR. I think just once we got MTR, right? Across the whole situation. That was just the 3 marks here. Now, can you understand the marking scheme, every one of you, if I can get your yes answers or no answers? Can you understand the marking scheme when you are gaining 3 marks and when you're gaining 2 marks? Is everyone clear on that marking scheme of 3 and 2? And is everyone getting the filter down effect that you read the case from top down? And where an underlining will give you 3 marks and where an underlining will give you 2 marks. Is everyone clear on that? Okay, that's perfect, right? Now just one last skimming. If I take you back to the case and I read the last line of the first page, the treasury management function also deals with, if you look at the last line, the treasury management function also deals with, and you go to the next page, deals with short-term investments. So we're finding another accounting treatment, short-term investments, another IFRS 9, short-term investments. In January 2015, the cash of $8 million was invested in a portfolio of equity shares held in a listed company. The shares are recognized at cost of $8 million, but the fair value of the shares at the year end is $6 million. We know that the short-term investments in the shares are to be held at the fair value through P&L. You are holding them at a cost, whereas you should have holded them at the fair value. So currently your investment is overstated by $2 million and your profits are overstated by $2 million because you should have recognized the short-term investment at the fair value through P&L. So do we have an M here? Do we have an M? Do we have a value of the short-term investment? They have to be recorded. They are currently recorded at a cost. So cost of $8 million is the M. And you can find another materiality, which is the $2 million. The $2 million is the difference. So you can comment on $8 million as well as the $2 million, but you will still get 1 mark. You will still get 1 mark, Wasim. You will find the materiality of $2 million because that will affect the profit of the company. But they're recorded at $8 million. So we need to find the materiality also on the recording of $8 million. So you will comment on the $8 million as well as the $2 million, but you will still get 1 mark. Then you have a treatment and then you have a risk. So is this short-term investment giving us another situation where we have the 3 marks, short-term investment? Do we have an MTR? The MTR for a short-term investment? So short-term investments have to be recorded at the fair value, right? So we have the materiality. One materiality is $8 million, and plus there is another materiality of $2 million. The 2 million is the difference, right? 2 million is the difference. So 2 million will be identified on the profit before tax. You will divide the 2 million with the profit because it will hit your profit. 8 million is the cost. So you will divide it with the total assets. So Karan, you're right. 8 million will be divided by the total assets. 2 million will be divided by the profit, but you have two values to identify the materiality, right? So M is the materiality. T is the treatment of IFRS 9 with regards to the short-term investments. And then you have a risk. So we are taking cumulative marks to 3. So that's another situation which is giving us the 3 marks. But we already made our 17 marks at the point number H. The point number I is an extra point. So has this approach helped you? That how you go down reading the case and how you go down underlining when you're sitting back at home, and preparing yourself for the March exams, you keep a question in front of you which have been suggested to you, and you just do the same thing you've done in the session today. And just go down, underline, and write your number of marks 2, 3, 2, 3, 2, 3, 2, 3, and you will make up your desired marks. So you know how to go about it. Right? You can see my draftings. I've shared my answers. So you can see how to draft a new audit client, how to draft a newly listed company, sales are made in 60 countries, and so on and so forth. Right? So be assured of the 2 and 3 marking scheme, right? Now, just one last thing before we get down to the first break. I hope all of you know the structure of putting into a briefing note, because a lot of times the students are very bad on the structure down of the briefing note. You're attempting a question number 1, right? Which is to be attempted in a format of a briefing note. Now, if I just skim that quickly and put the structure down with you for June 15 answer, and then we'll exit down for the first break and resume back with the June 17 question number 1, because that has a different marking scheme, because in the June 17 question, we have utilized the analytical procedures. Okay, let me show you the last glimpse of this question. And if you have any further questions on June 15, you still have the WhatsApp, but I will be available on the WhatsApp tomorrow. And whatever questions you raise on the WhatsApp group tomorrow with regards to the day 1 only, I will be responding to the day 1 questions tomorrow on the WhatsApp through my voice clips, so you can get a better understanding of your question, right? But you have to give me some time to respond to your queries, but surely I'll be responding you within a span of 24 hours. Okay, now can you see back the question in front of your screen, and can you see down the requirements of the question A, B, C? And you need to write in a briefing note, right? You need to write in a briefing note for the requirement ABC. A is to discuss the specific matters to the planning of the initial audit engagement. Then B is the audit risk. 3C is the procedures, right? So we have to discuss the specific matters to the planning of the first year audit. B is the audit risk. C is the procedures. Now let's see how you make a briefing note. See, you got an email, right? And can you see the email coming from to, from, regarding? Now when we reply to the email, we have to reply the same way. To, from, RE, to, from, RE. So let's formulate the answer. Now when you put in the briefing note, let's quickly understand that, because I'll not be doing that in the June 17 answer. If you put in the structure of the briefing note, the structure of the briefing note, because many of you will be attempting the P7 paper or the AAA paper for the first time. Structure of the briefing note, right? You put the heading briefing note, that's must. Put a heading briefing note, that's a must. Under the heading of the briefing note, you write to, you write from, and you write RE, regarding. It's to whom? It's from Jack. If you see back the screen, right? It's from Jack. So currently from will become the to. So it's to Jack Hackett, and it's from the audit manager. So Jack Hackett. So it's to Jack Hackett. I'll write the same word here, Jack Hackett, and it's from the audit manager. So I use the same header. I didn't change the header at all. And what's the re? The re is given here, which is basically about the re is about TED company audit planning. So I cannot change the re, because when you respond to an email, a lot of times students change the subject, because when I receive an email and I respond to an email, the subject never changes. So you need to write the same subject, which is TED company audit planning, right here, TED company audit planning. Then under that, you write introduction. Introduction is a must when you're writing a briefing note. So introduction is another must. Now, introduction is basically the purpose. Yes, introduction is basically the purpose. What is your purpose? ABC. You have to do three things. See how quickly you wrap up the introduction. See how quickly. Wahiduddin, you think that takes a lot of time? See how quickly I'll write the introduction. The purpose, of writing this briefing note is to explain the specific matters to be considered in planning the first year audit, along with the audit risks, within the financial statements of TED company, and to recommend procedures on short-term investments and earning per share. See, I just summed that up. Yes, it's the requirements, but we cannot just copy paste the requirements, right? We just need to rephrase the requirements. Yes, exactly. Sal, I just need to stick to the header given in the email. I cannot change the header of the email. So if it is regarding, I'll keep it regarding. If it is subject, I'll keep subject. So see how skimmed was the introduction? We have to do three things, right? We have to do three things, ABC. See how I summed up ABC. A lot of times students write such lengthy introductions. Please remember, the introduction is basically the purpose, and the purpose is ABC. Now under that, you will write the first A. A is the specific matters in planning the first year audit, which we are not attempting in this practice session. Planning the first year audit, examiner I think has given us 6 marks for that. Then in the B you have to write the audit risk, and in the C you need to write procedures. Now under the audit risk, we wrote so many audit risks, right? Let me cut that from top here, from all A to H, because that made the marks. So I just bring A to H down, and I'll just paste A to H here. So I write all these risks, making my 17 marks, and then I need to write procedures, right? The first procedures I need to write is on the earning per share, EPS. Then I need to write procedures on the short-term investment. Under each procedures, I need to write 4. So I need to write 4 procedures, whatever the 4 procedures are. And then in the end, I have to give a heading known as conclusion. A conclusion is a conclusion of the briefing note, but the conclusion has to be more focused on risk, because risk is the major part of the question number 1, right? So you're just concluding the briefing note, but the focal point of conclusion has to be on the risk requirement, which is a major mark scoring opportunity here. See how you give a conclusion. And again, the conclusion have to be concise. No, conclusion is part of your 4 professional marks. You will not get any extra marks, but that's part and parcel of your 4 professional marks. And I'll just give you a breakdown of the 4 professional marks, right? So when you're writing a conclusion, see how you write the conclusion. The TED company financial statements contains numerous risk of material misstatements, and the audit firm should devise a right audit plan to carefully mitigate the risk identified in order to reduce the overall detection risk to an acceptable level. See how you concluded, because you were attempting a question on audit risk. So I have to give a conclusion very specific to audit risk. The TED company's financial statement contains numerous risk of material misstatements, and the audit firm should devise a right audit plan to carefully mitigate the risk identified in order to reduce the overall detection risk. See, I deliberately brought the detection risk because I was attempting a question on audit risk. Now see, this is the structure. Conclusion was a must, introduction was a must, the header was a must, then in between was the requirements ABC. Now see how you get the 4 marks. When you look at the 4 marks, which is basically the professional marks, see how you get these professional marks. You will get 1 mark for the format. The format was from the introduction, the format was from the header to conclusion. From header to conclusion was the format. Then you will get 1 mark for the logical flow. The logical flow means ABC. If I know the B answer well, I cannot start writing the B first, because I'm attempting a briefing note where ABC is very important, right? So I should be writing in the logical flow ABC. Logical flow, that is A, B, C, and I'll get another 1 mark. Then the 2 marks is for the persuasiveness of the answer. How persuasive your answer is. How impressive your answer is. Now that's very subjective marks. I believe all of you cannot take this, because some of you have a very impressive way of writing answers, very specific to MTR, or very specific to risk, or very specific to identifying risk. And so in all, the 2 marks, the first 2 marks are scoring, but the remaining 2 marks is very subjective. But that's the breakdown. And that conclusion is part of the persuasiveness. So at least when you write a conclusion, at least when you write a conclusion, the conclusion is part of the persuasiveness. So at least you can gain 1 mark, 1 mark for conclusion. So that's how you can be better. Okay, just give me a quick response to my question. Are you clear with the first question we have gone through? Just for the sake of the marking scheme, for the format of the briefing note, because I'll be doing the second question, June 17, in a very different manner, because that question has analytical procedures, and in that question, I'll be guiding you many different things, which I didn't guide you in the June 15 purposely. So is everyone clear about how to go down with the question 1 in format of a briefing note? And what are the do's and don'ts of the briefing note? And is everyone clear about how you filter down the risk from start to end? And most of you who are repeating the AAA paper might be familiar with the old marking scheme, which used to be in place till June 18 exams. But since June 18 exams, there has been a tremendous change in some areas in terms of the marking scheme. So I have to update you upon the recent marking schemes so that you stick to writing a proper answer. Now, how would you be writing? I have shared my answers with you so that you know the length of answers, because a lot of time you get distracted with examiner answers. You tend to write a lot. So you should also know how much concise writings you should be doing and completing your 100% paper, right? I'm taking the first break of this day 1 practice to pass session, and approximately it's about 12 to 13 minutes. So I'll be back at 10:45 p.m. The Pakistan Standard Time. So that's approximately a 13 minutes break, 1-3. And from 10:45 till the end of the session, 11:30, we'll be drilling the June 17 question number 1. Anyone who has the hard copy or the past papers, please ensure that within the break of 13 minutes, you just go over the June 17 question number 1, so you can better participate in the session. And I hope everyone is clear with the housekeeping instructions that you have to utilize the WhatsApp group for raising your questions. It's very good to see that you're keeping your questions to minimal, and I believe you will be putting your questions on the WhatsApp group, and you will be giving me 24 hours after every session ends so I can respond back to your queries. Okay, time for the break, right? We'll be resuming back in 10:45 p.m. the Pakistan Standard Time. Okay, welcome back after the break. And now we are focusing on June 17, question number 1, because that involves the use of analytical procedures. So I have to give you a better idea how you take the 5 marks from analytical procedures and how you get those 5 marks, basically, because there are a lot of confusions about gaining the 5 marks from analytical procedures when the question specifically asks for performing the analytical procedures. So okay, let's take a glimpse down the June 17 question now, because I need to show you the drafting of the analytical procedures specifically, because that's the weakest area of students because they underperform on those 5 marks basically. So let's go down with June 17 question number 1 as the second one for this practice to pass session day 1. And let me put the question in front of you. You can now see in front of your screen the June 17 question number 1, where we have a requirement A. And if you see the requirement A, that requirement is very specific now for the 16 marks requirement. The examiner is asking for evaluate the risk of material misstatements. So we are not worried about any detection risk this time. We are just worried about identifying the risk of material misstatements, right? So we're just working on a risk of material misstatements to be considered in planning the audit of the group. So this is a group question. Now, we know the marking scheme of the risk of material misstatement. We just got that from the June 15 question 3 and 2. But in this question, after the full stop, you can see the examiner is asking for your evaluation should utilize the analytical procedures as a method for identifying relevant risk. Your evaluation should utilize the analytical procedures. Now that means should utilize the analytical procedures as a method for identifying risk. And that means this has marks now because the examiner wants you to utilize. Now, when you utilize, you have to show it. And when you show it, you get marks for it. So when you see a requirement where the examiner says you should perform the analytical procedures or the examiner says you should utilize the analytical procedures, you have marks straight away, 5 marks. But how will you gain that? You have 16 marks, right? And from the 16 marks, this utilizing the analytical procedures, will give you this utilizing the analytical procedures will straight away give you 5 marks. So 16, and from the 16 you have to take in the 5 marks straight away. So that means we have 11 marks, right, for the risk of material misstatement. Okay, let's understand the marking scheme. We have 16 marks, right, and we're attempting the B part, sorry, the A part. And in the A part, we have to do 2 things. First, we need to evaluate the ROMM, and we need to utilize the analytical procedures. Now, how would we take marks? 16 for utilizing the analytical procedures. We straight away take 5, and the remaining 11 goes to evaluating the risk of material misstatements. Now we know some of the risk of material misstatements can have 3 MTR, and some of the links, some of the risk can have 2 marks. You know, evaluate the risk of material misstatement, right? The one with MTR will give you 3 marks, and the one without MTR will give you 2 marks. Now that's clear from the previous question we did, right? Now comes utilizing the analytical procedures. Now that means 1 mark per ratio with comparative, including 1 mark per ratio with comparative included in your analytical review. That is very, very important statement. 1 mark per ratio. In the previous exams in 2017-16, the examiner has a very different focus to analytical procedures. Examiner used to say 1 mark per ratio with comparative calculated. You calculate a ratio with comparative and you get 1 mark. But now the examiner has changed the scenario and the examiner says 1 mark per ratio with comparative, calculated and included in your analytical review. So both together, calculated and included in your analytical review, means has been included in your commentary. So if you do a commentary with calculation, you will get 1 mark. So see how would you format these 5 marks? How would you show the 5 ratios? And under the 5 ratios, how would you be showing the analytical review to take the 5 marks? Yes, exactly, Karan. That's perfectly right understanding. Okay, let's go down with the format, the structure of the answer, the structure of June 17 question number 1. Again, we need to write this answer down with a briefing note. So we'll start that quickly. Briefing note, then go down with from, uh, the next from, and over here we have the subject. So from subject, right? So we'll write from subject. And we have to do how many things here? 3, A, B, C. In A, risk, in B, additional information, and in C, procedures. So let's quickly sum up that. From subject, and then we need to write the introduction, and again in the introduction you need to write the purpose of writing this briefing note is to, and you continue writing your answer, whatever and however you want to write in the answer. Right, full stop. So you need to write a briefing note as a heading, again recapping. Then you need to put in the everything is important, right? Everything is important. Briefing note from subject and introduction. Now then after that, you come down with the requirement A. The requirement A is to do the risk of material misstatements with analytical procedures. Now see how you present your answer, right? The requirement 2 is additional information. The requirement 2 is additional information, and the requirement 3 is to write on procedures on A and B. So when you're writing the procedures on A and B, which is the procedures on the impairment of the Chiku brand, and the planned acquisition. Procedures on the impairment and the planned acquisition. Now that's how you're going down, right? And then towards the end, you write in a conclusion. So that's the structure. Now the something which I need to show you is not the risk of material misstatement. Something I want to show you is the analytical procedures in scoring the 5 marks. Now, first of all, when you start writing the A answer, you will make a table, right? Like this. I need to have 2 columns, the ratio, and the 2 columns with their numbers, 5, like this. And I just insert another row below. Okay, now in this column, I'll write the ratios. And in this column, I have 2 years, right? The 2 years for which the ratios have to be put in 2017 and 2016. So I need the ratios for 2017 and comparative 2016. Now, you can see the data, you can see the financial data given in the question, which you need to utilize and determine the ratios. right? I can just show you that. You can see a lot of financial information has been given. You can see the balance sheet coming on the page 2, and the balance sheet after that you can see the income statement. So you have a lot of information to make up the 5 ratios. Let's see how to go down with it. Now I'll be utilizing the first ratio, being the operating margin, number 1. I'll be working on the interest cover. I'll be working on the effective tax rate. I'll be working on the current ratio, and I'll be working on the gearing. You can choose any 5 ratios on which you know there is potential, because you will be reading the case first, right? I'm not reading it. I'm just directly showing you the way of attempting it, right? But when you read the case, you will be in a better position that which ratios you will be putting in, because the case will guide you on which ratios you can do a proper commenting. Now I choose these 5 ratios, and I'll tell you how you go down writing in the 5 marks answer. Now you write the operating margin, whatever that is. You calculate the operating profit margin. That's basically 15.9% in 2017, and it's basically 19% in 2016. Then the interest cover is 5 times in 2017, and the interest cover is 5.3 times in 2016. Yes, we use the projected figures, right, Karan? The current year is projected because we are at the stage of planning, right? So we take the 2017 projected and 2016 actual. Effective tax rate. The effective tax rate is 10.7% in 2017, and the effective tax rate is 10% in 2016. The current ratio is 7.5 is to 1 in 2017, but the current ratio was 4.3 is to 1 in 2016. No need to show the workings, right? See exactly the way I'm doing, And the gearing is 30.4%, and thereafter the gearing is 26.6%. Now, when you make this table, this is not giving you 5 marks, right? Because in the previous formats of the AAA paper, this table used to give you 5 marks. But now the examiner says you will not get the 5 marks till the time you calculate the ratios. You calculate the ratios, which we have done. But along with the calculation, you have to include in your analytical review. We still have to do this. So at least we got half the marks right. Now you're getting the remaining. Now under the table of your ratios, you will start to comment. Starting with operating margin. The operating margin has decreased to 15.9% over the last year, 19%. Now we know what is included in the operating margin. Operating margin, sorry for that. You know what is included in the operating margin, right? The sales and the operating expenses. Now we need to identify the risk. If I take you to the question, and you see the revenue, coming here. The revenue of the company is increased, and if you can work on the percentage of the revenue increasing, right? Can anyone find down the increase in the revenue from the last year? 12.8%, right? Now we need to be here. Operating margin has decreased to 15.9% over the last year, 19%, despite the sales increasing by 12.8%. There could be a risk that the sales are overstated, because that's the embedded risk of sales, right? The inherent risk. There could be a risk that sales are overstated because they have already grown by 12.8% despite the company has withdrawn one of their major product from sales, that is the Chiku brand. Now that's given in the case study, right? That's given in the case study that company has withdrawn one of its very important brand, Chiku brand, from the sales. Now, despite withdrawing your major product, Chiku brand, your sales are still rising by 12.8%. So there is a risk that the sales could be overstated. Now, that means if the sales are overstated, your operating profit margin, which has decreased, could still be fabricated. Your operating profit margin has decreased to 15.9% when there is a risk that the sales could be fabricated. So is there a risk that the 15.9 has been window dressed? The 15.9 could have been 13. The 15.9 could have been 12. So is everyone getting my point clear here? So the operating profit margin has gone down, but what if it should have gone down more? And the company has fabricated it to show it at 15.9% by manipulating the sales number here. So the sales have increased despite the fact the company has withdrawn a product which is given in the case study. So there is a risk in the operating profit margin. That's number one. Then number two, the operating expenses has increased by how much? Operating expenses have increased by? Can you find the percentage for that? 17%. The operating expense has increased by 17% over the last year, which is not consistent with the growth in sales, which is not consistent with the growth in sales. Now, see how you go back to the case. You found out a percentage that the operating expenses have increased by 17% over the last year, which is not consistent with the growth in sales. Now, let's go back to the case. I want to show you something. When you look at the operating profit margin, operating expenses, see how much have they increased operating expenses? From 158, they've increased to 185. So that's 168, 178. So they've increased by $27 million. By $27 million, they have increased. $27 million they have increased. Now, you might be amazed why I am taking out this $27 million. When you go down on the page 3, the page 3 tells you that the company has impaired a Chiku brand. In December 16, the Chiku brand name was impaired by $30 million. Now, when you impair a Chiku brand with $30 million, now we know that the impairment must have hit your operating expenses. Now, only the movement of impairment, that the impairment loss you are recognizing is hitting 30 million. And when you look at your operating expenses, yeah, they have just increased by 27. So do you believe the operating expense have increased by less amount here? Should there had been a more increase in operating expense, because only the impairment part is 30 million. Only the impairment part is 30 million. So if I add 158 plus 30, I go to 188. And there might be many more operating expenses which must have increased. So should it be more than $27 million? Because only the impairment is $30 million. So do you believe the operating expenses have been understated here despite showing a growth of 17%? Do you all agree with that? No, the sales have increased, right, Amsal? We need to be skeptical, right? We need to think negative. So do you all believe, can I get your yes and no answers quickly? Do you all believe that the operating expenses, despite the fact they're increasing by 17%, there is an understatement here? Because alone the impairment is 30 million. So can I go back and write my ratio here? Operating expenses have increased by 17% over the last year, which is not consistent with the growth in sales first. Moreover, it seems that operating expenses are understated. Operating expenses are understated as the increase in operating expenses is just $27 million, despite the fact that there has been an impairment of $30 million. So have we identified two risks here? One being that operating expenses could be understated as part of the operating profit margin, and that the sales are overstated because they have already grown despite the Chiku product has been withdrawn. So this is what the examiner is looking for under the table of the ratios. Now, all of you should know that operating profit margin consists of two things: sales and expenses. So you can comment on sales when you're commenting on the operating profit margin, and you can comment on the operating expenses, and see, you are showing a better impression to examiner. So every comment you do under the table of ratio, you're scoring 1 mark. So the first one help us to get 1 mark. The second one help us to get another 1 mark. So we got 2 marks now because we converted the operating profit margin into risk. Okay, let's do the third risk. Number 3, interest cover. The interest cover has remained 5 times. Last time it was 5.3 times. So we need to work on the interest cover. So if we go back, look at what is happening with interest cover. Can you see that? Can you see the finance cost of the company is static at 7? Can you see there is a static finance cost of $7 million? Now go to the next page and see whether the company has taken out a new loan. A $20 million loan was taken in January 17. Has the company taken on a new loan? So should the finance cost increase? Should the finance cost increase? So have we identified another risk through interest cover? Now, when you are commenting on the interest cover, you should take into account the finance cost. And when you take into account the finance cost, you should also take into account the new loan. So see how you're getting your point. Under the next one, you're saying the finance cost, the interest cover has almost remained unchanged, from last year, as it was 5.3 times in 16, whereas it's 5.3 times in 17. So this almost like static, right? The interest cover has almost remained unchanged. Now we say the interest cover, the finance cost, which is part of the interest cover, right? The finance cost has remained static despite the company has taken on a new loan. Thus, the finance cost could be understated, and the interest cover could be manipulated. See, we got the third mark. Now, if you know the components of the ratios, you can really comment well. Operating margin, sales and expenses, interest cover, and you're thinking about interest cover connects with the finance cost, right? So you're thinking about what has happened to the finance cost. Yes, every reasonable comment attracts 1 mark. So far we got 3 marks under the table. So do we only have marks for calculation? I'm asking a question to all of you. Do we only have marks for calculations? No. We have marks for calculation plus the commentary. And can you understand the commentary, how I am doing the commentary? Are you picking the sense of commentary? But please keep this commentary minimal because you're just scoring 1 mark. For 1 mark, you cannot write much. Keep it down. Keep it down. Okay, let's go down to the last one. Which other ratio we have? The current ratio. Can you see the current ratio? Can you see the current ratio have increased a lot? Sorry, the effective tax rate, right? The effective tax rate. The effective tax rate has marginally increased. From 10% to 10.7%. Now, when you look at the tax rate and you go back and you see the tax coming here, can you see the tax expense remaining the same? Is that another strange thing? You must have divided the tax expense with the profit before tax, right? Yes, I think I just need to make a correction here, right? Uh, okay, the effective tax rate, right? The effective tax rate has marginally increased from 10 to 10.7%, right? And can you see can you see the tax expense coming as the static number? Amsal, you must have divided the 3 with 30 and 3 with 28 to get the effective tax rate. So is it strange that the tax expense is the same in both years? Now, can we think about that the tax expense could be understated? The tax expense could be understated. Now, if you want an amazing result to that the tax expense is understated, go and see this. Can you see the deferred tax here? Can you see the deferred tax increasing from 2 to 10? Can you see the deferred tax increasing from 2 to 10? When there is an increase in the deferred tax, now this is a deferred tax liability, right? If you go to the note number 4, the note number 4 is about a deferred tax liability. Now the deferred tax liability has increased from $2 million to $8 million. See this note number 4 in front of your screen. The deferred tax liability has increased from $2 million to $10 million. So when you recognize a deferred tax liability, where should the debit go? The credit has come in the non-current liability. Where should the debit go? Should not the debit hit the tax expense for the year? Should not it hit the expense? So when you are recording a deferred tax liability, have you increased your deferred tax liability from 2 to 10? So when you increase the deferred tax liability from 2 to 10, where is the corresponding effect? Where is the debit effect? The debit effect must have hit the tax expense, right? No. This is a deferred tax liability, right? Because it has arisen from the depreciation. So Can we see the visible aid difference, and the visible aid difference should have affected the tax expense? Is that true? So are we very sure that the tax expense is understated? The tax expense is understated for this company. However, the tax expense has remained the same for both years and could be understated, could be understated because the tax expense should had increased due to the changes, due to the increase due to the increase in deferred tax liability, due to the increase in deferred tax liability by $8 million. Your deferred tax liability has increased by $8 million. So when deferred tax liability has increased by $8 million, you must have credited the deferred tax liability, but you must have debited the expense, the tax expense. So it's very clear that your tax expense is understated, and that means that your effective tax rate is being manipulated here. So when you think about the effective tax rate in the exam paper, you are very much critical about the tax expense. And see, have we identified that the tax expense is understated? Have we found the fourth mark? Have we found the fourth mark? And the last one, current ratio. Has the current ratio increased a lot from the last year? The current ratio has increased significantly from the last year. Is it so? Has it increased significantly from the last year? The current assets, the current assets could be overstated, and the current liabilities could be understated. Is that the risk? Should we know the components? I hope all of you are getting my strong message here, that for each ratio you should know the components, because if you know the components, you can really comment on the risk factor. See, for a current ratio, I should know the current assets and liabilities. For the effective tax rate, I should know the tax expense. For the interest cover, I should know the finance cost. For the operating profit margin, I should know the sales and expenses. Madhya Iqbal, you can just catch on the video on the Vimeo to get the point of the deferred tax again, because when there is a rise in the deferred tax liability, what accounting entry will you be passing? You must have credited your deferred tax liability, but against the credit of the deferred tax liability, what you must have debited? You must have debited your tax expense, right? So is everyone clear about how I did the commentary? Now, can you just go back to the balance sheet of this company and tell me how much the current assets have increased? How much the current assets have increased from the last year? Can you just identify the percentage? How much the current assets have increased from last year in terms of the percentage? 34. Is that a significant rise? Can we think about these are overstated? So has it increased a lot? And can you find the current liabilities, how much they have fallen? How much the current liabilities have fallen? But Ali Shoaib, you have to do that much, right? You have to do that much. So see very carefully, all of you. The current liabilities have gone down by 24%, and the current assets have gone up by 34%. So see, the current assets could be overstated as they have increased by 34% over the last year, and the current liabilities could be understated as they have decreased by 24% over the last year. See how you made an impact on your answer. Current assets, current liabilities. And that's where you're getting your fifth and the final mark. And that's where you're ending. So has everyone got how to make the table here? See, I made a table of 5 ratios, but interestingly, from operating margin, I got 2 marks. I got 1 mark from interest cover. I got 1 mark from effective tax rate. I got 1 mark from current ratio. Right? So is everyone clear about how to put the answer under the analytical review? And is everyone clear on the marking schemes? Is everyone clear on the marking scheme of the table? Can you see the table in front of your screen followed by the commentary? Very clear commentary under 5 paragraphs. Now, where you end with that, you've already taken your 5 marks. Now you can start to read the case and you can start to find the MTR or the TR, and you read a case as you read it normally, right? Now, can you see these balance sheet here on the screen? And can you see the note number 1 and the note number 2 coming in the balance sheet? And can you see the note number 3 and the note number 4 coming in the balance sheet? Now, if I'm a clever student, can I see the values assigned to 3, 4, 1, 2, 3, 4? Can you see the values assigned to 1, 2, 3, 4 in the balance sheet? And with every 1, 2, 3, 4, with every 1, 2, 3, 4, that is a note number. I would have an accounting treatment. I would have an accounting treatment and I would have a risk. So if you're a clever student, you can convert the 1, 2, 3, 4 into MTR, because every 1, 2, 3, 4 has a number, every 1, 2, 3, 4 has an accounting treatment, and every 1, 2, 3, 4 has a risk. So if you just work on the note numbers, if you just work on 4 notes given, each note can give you 3 marks, because each note has an MTR, so is equal to 12 marks. How many marks we had to gain from the risk of material misstatement in this question after deducting the 5 marks? After deducting the 5 marks, how many marks we need to gain? 11. So see, we got straight away 12 marks. If I just work on the note numbers and I convert every note number to MTR, I get straight away 12 marks. And with that, I have my 5 marks here. So see, can you see the marking scheme again in front of your screen? So is everyone clear on utilizing the analytical procedures and how to go down with the commentary on utilizing the analytical procedures if that comes in the March 19 exams? And is everyone clear on the marking scheme of 3, when to use the 3 marking scheme? When you will get the 3 marks? Is everyone clear on that? And is everyone clear on when will you get the 2 marks? When you don't have an M, or when you have a very journal statement like the company is listed, this is the first year audit, right? The answers have been shared with you. Just try going over the answers. And have you got a real structure of the briefing note? To, from, subject, introduction. Under that you write your A, then after the A you write your B, then you write your C, and then you give down a conclusion. So is everyone clear on the content of the day 1? The day 1 content was to focus on the risk of material misstatement and the audit risk, and you should be clear on both of them, right? That when you're attempting an audit risk question, you have to do the risk of material misstatement as well as the detection risk. And when you are doing a risk of material misstatement question, you will only focus on risk of material misstatement. Right now, obviously on the WhatsApp group, which has been structured, and I'll be adding most of you to the WhatsApp group in the next 24 hours. I'll be sharing this Word file which I used on the day 1, So you can utilize this file and keep a source of this file so that you know the marking schemes and everything. And I'll be sharing with you the accounting standard summaries because that's like a very favorite request of the students. So I'll keep sharing some very important documents with students over the next 4 days. So stay tuned to the WhatsApp group as well, right? Okay, just a final recap of the day. We had today the first day of this practice to pass webinar. Okay, just want to scroll down that we have an effective understanding today, right? Okay, final recap, and in between I would be looking forward to your feedback to the session today as we move into the last 3 to 4 minutes of the session today. So I'll be looking forward to your feedback on how good the session was today and how much insights have you got from the session today in terms of students, particularly those students who are preparing for the first attempt to the AAA paper, how insightful the session had been for you in terms of attempting a question on risk. So I'll be looking forward to your feedback on the screen. Okay, just in terms of the recap, we did two things today. We did an audit risk question and we did a risk of material misstatement question. The reason for that is both are important for March 19. I didn't spend time on the business risk because I did that in the December 18 webinar. And again, the business risk has come down in December 18 webinar. So the likelihood of reappearing is not there. So you should be better spending your time on audit risk and risk of material misstatement. And you should know the difference between both the risk of material misstatement and the audit risk, right? And then the more important thing I tried to highlight was the marking scheme, because if any one of you has given a prior attempt, you must not be updated with the marking scheme. So you should be knowing the marking scheme as well of this topic. And then I really spent time on the briefing note structure because I believe those are four very important marks. And normally the students are not very well equipped with those 4 marks in making up a briefing note and normally lose marks there, right? Now, when I meet you tomorrow, tomorrow will be the evidence day 2. And I believe evidence is another area where a lot of students have a lot of confusion. And I'll be guiding you tomorrow that is evidence really important for March 19 exams? And if yes, then what sort of a question are we expecting on evidence to come in? Now, just utilizing the last 3 minutes and for this session, if I just take you to the website of the technical articles, the ACCA AAA technical articles right in front of your screen, and you go down these articles, can you see these two articles in front of your screen? One is auditing in a specialized industry, audit in a specialized industry. This one, this is the new article for March 19 exams. You should read this article. This is a so easy article, audit in a specialized industry. This is such a simple article which tells you about your competence and experience to in a specialized industry. This is an article which has been written on quality control, having the right competence, having the right experience to do audit in a specialized industry. So this article is more exploring to competence and more exploring to having competence in terms of a specialized industry. A very simple article, but please don't miss this article for March 19 exams. It might fit somewhere. Don't take a risk. Then there was an article which was basically published for December exams, but it was not asked for in the December exams. So you will have a carry forward effect to that. You have to take this article, which is the next one on the screen in front of you. This is an article on the exposure draft, auditing accounting estimates and related disclosure. Um, Please assure you have read the article on auditing accounting estimates and related disclosure, because this article is a current issue. So if you are asking what is the current issue, this was a current issue for December exams, but it didn't appear in December exams. So there will be a carry forward effect of this article. So please ensure you do read this article on auditing, accounting estimates, and related disclosure, as this is a current issue and a very, very important article. So the two articles in front of your screens are a must to read articles, and I'll just be giving you a glimpse of both the articles on the day four, in the last 15 to 20 minutes of the day four, so that you have a better glimpse of auditing in a specialized industry and the IAASB exposure draft. Okay, it's time to say you goodbye for the day one, and I hope you had a good session today and you will be implementing what you learned today on day one. And I will be seeing your enthusiastic response on the day two tomorrow, when we look forward to do evidence, yet in a very important topic, right? So whatever you have learned from the day today, please ensure you implement that. You don't have much time, right? You just have 3 weeks before your exams in March. So go down, sit down, have a proper study plan, and utilize your time very effectively. I'll see you tomorrow in the day two live session, 9 to 11:30 p.m. the Pakistan Standard Time. And I say goodbye from the day one of the AAA Practice to Pass session for March 19 exams being organized by ACCA Pakistan. I was your tutor, Kashif Kamran.